We'll get started.
Yeah, so here are some of the 8 steps that we like to consider when getting into a home, and it is what we will be discussing over the next few slides. So the first step is decide where and when to buy and go all in. So you're here, which means that you're interested. The next step is to really, get into it. Choosing your professionals and becoming an educated home buyer. Again, that is the sole purpose of this presentation. Securing financing and going over the pre-approval process, previewing homes, which is what we like to say is the fun part, making an educated offer, performing due diligence, preparing to close, and finally celebrating. So we'll just jump right into the presentation.
Awesome. So obviously, number one, you want to decide to buy and go all in. So congratulations on taking this first step towards buying a home. A home is one of the largest financial assets most people have due to equity and appreciation, especially the last few years. I mean, they've been appreciating pretty significantly. So it's a great investment and a relatively low investment to get into the market. So why pay someone else's mortgage when you can own your own home? So the first step is deciding where you want to live, what type of home you're looking for, and what features are must-haves, and then what would be nice to have in a home. So I actually have a whole buyer's packet that I send out to my buyers, and in it, there's 2 pages of questions that kind of helps you narrow down exactly what you're looking for. If anybody wants a copy of my buyer's package at the end, I'm happy to give it to you. It's a little more detailed than what we're going to go into today because we only have an hour, but those 2 pages are in there that really helps you narrow down what you're looking for, which is great. So there'll be trade-offs, but rest assured we are here to help you sort through it all and find the best home at the best price that you love. So second is choosing your professionals. So you're going to want to have a realtor on your side, a mortgage agent, a lawyer, and then most likely a home inspector as well. I'm just going to talk quickly about the realtor side, and then I'll hand it over to Emily to talk about the mortgage agent. And then the lawyer, I know Emily has someone that she really likes to work with, and then I have a couple lawyers as well here locally in Kingston that I work with. So the realtor side is really important that you first understand whose interest realtors are legally bound to serve. Oh, sorry, I'm just going to let one more person in here. 2 more people. 1 second here. Hi there. Welcome. Thanks for joining us, guys.
Thanks for joining.
So very important that you understand whose interest realtors are legally bound to serve in a real estate transaction. So you're going to have your listing agents, and then you're going to have your buyer's agents. So the listing agent is under contract with the seller to market their property for the best possible price. Working with a listing agent as a buyer means that you can arrange a showing through them on a property. You can provide details about the property, and they can explain all the forms and agreements related to buying the property. So for instance, if you're going through an open house, you're likely going to run into the listing agent. And just know that that listing agent is working for the seller. So anything during the open house that you tell them, all that information will get passed along to them. So that's the important thing to understand about the listing agent, is that they are protecting the seller's best interests. So I always recommend that you have your own buyer's agent as well. Your buyer's agent is like your own personal realtor. There's no cost to you as a buyer. Usually 9 times out of 10, that cost is covered by the seller in the closing costs. The only time that you may run into having to pay your buyer's agent is if we ran into a private sale and they were refusing to pay the buyer's commission. Now, fortunately, in my 15 years, I have yet to run into a seller that's not paying the buyer's commission. That being said, it does happen, and it can happen. Now, if it does, it's not going to be a surprise to you. Your realtor is going to go over that with you and let you know that it would be your responsibility, and you guys can talk that over and work that out if you're going to make an offer on that property. But 9 times out of 10, the buyer's commission is paid from the seller. Okay. And when you engage the services of your own personal agent, someone who's under contract to work solely in your best interest, you get all the same services listed above, but your personal realtor also will provide expert advice on the market value, location, as well as helping you to decide when you should walk away. That's right. Sometimes we will tell you that it's not the right fit for you. Maybe you're overpaying for the home, or maybe the resale value isn't going to be there in the end. So certainly it's your decision, but we'll give you the pros and cons to make sure that you're making the best decision for you. And then they're going to give you expert advice on useful clauses such as home inspections and financing to fully protect you. We'll go over a little more detail on the closes later on. And then expert negotiate on the offer price to purchase the best possible price and terms. Now I'm going to hand it over to Emily.
Thank you. So mortgage agent or broker or lender, whoever you decide to use, what I bring to the table that might be a little bit different is I'm a licensed mortgage professional, which means that I am regulated and I have to represent my buyers and my clients with a regulatory body, which means that I have to do what's right in their best interests. And it also means that I have access to multiple lenders. So in the chance where you walk into your bank, you have access to their lenders. If you were to work with a mortgage agent, then you would be able to work with multiple lenders. Virtual experience. So this is where I think, I've really won the lottery with my clients, especially ones that have families. It's sometimes difficult to find time off during the 9 to 5 when banks are open. But when everything's virtual, we can do things over the phone and you never physically have to leave your home. Detailed and goals-based strategies. So I never look at your mortgage as an end date. I always am in contact with my clients well after their closing date to ensure that they're still in the correct mortgage for them. And making sure that, the property and the mortgage that they've selected is really benefiting them long term. Thoughtful and process driven. So I've done it a long time. I really make sure that my process and my client journey is super streamlined. Having that white glove service, I like to say, really helps make the client experience less stressful. So that's where I really, I say I shine, as I like to make the process as pain-free and as stress-free as possible for my buyers. The lawyer, the reason I tend to work with Alessandra Ocampo or Vantage Law is because she is fully virtual as well. So there are a lot of lawyers out there, but she has been fully virtual. So she will actually do all of your signing from the comfort of your own home, which has been a huge win in today's current surroundings, that sort of thing. Unfortunately, today she is under the weather. So that is why she's not here today. But she normally would be coming in and speaking about closing and what the process there looks like. I will go into that for you because I have worked with her in very close proximity, and I can go into what that looks like and the costs associated with that. So we can just pop over to the next slide if that's okay. And that's securing your financing. So what I am going to speak to first are 2 first-time home buyer programs. And I won't spend too much time there just in case you are not a first-time buyer, if you are a buyer, but it's important that you understand that there are some programs out there that you can benefit from. And then I will speak to a third one at the time of closing, which is a couple slides ahead. So the first one I'm going to speak to you about is the first-time home buyer incentive. That is a program that came out in 2019, and it does allow for you to have a shared equity percentage from the default insurers through the government incentives, which can be 5% on a regular purchase or a 10% on a pre-construction. There are quite a few limitations when it comes to household income, qualification, and purchasing price. So I won't go down that rabbit hole too much, but it's important for you to know that that program is there if you need some assistance with down payment. And that can be a tool that some buyers, or first-time home buyers, I should say, can use that may be valuable to you. Now, whether you use myself or another mortgage professional to help you with the purchase, it's super important the person you're working with fully understands this program and can explain it to you in detail. It is not something that I would summarize in a 2-second blip. I think it's really important that you have a thorough understanding of what this means for you if you utilize this program long term. So please do understand and ask questions like, what happens when I sell? How do I pay back this loan? And how is this loan calculated at the time of payback? Those things are really important to understand because it is a shared equity loan, which means that as the value of your home goes up, the value of that loan that you owe back will also go up at that same percentage. So if you take a 5% loan today and the value of that house is 100,000, I know that's a little bit crazy, but let's just use nice, easy numbers. That's a $5,000 loan. If you sell that home later on and that home is worth 500,000, you would then have to owe back $25,000 based on that 5% of the property value. So it's very important that you understand that because that can take into the equity later if you're purchasing another home. So please do make sure that if you are utilizing that program, you're asking lots of questions and fully understand that program. The second program is first-time home buyer RSP withdrawals. So if you have been contributing to your RSPs over the last few years, and if you have an employer match program for your RSP, that's even better because that means that your employer has been offering you some help towards your first-time home buyer option if you'd wish to utilize it. You can use up to $35,000 per application or applicant, I should say, which means that if you and a spouse are purchasing a home together or you and a partner and you're both first-time home buyers, you can both actually withdraw up to $35,000 from your RSPs without any tax implications. And you can use that then to total $70,000 of your down payment. When you're doing that, you can actually do that without any tax implications and you can pay it back up to 15 years. So you can slowly pay that back and it's quite affordable if you'd like to do that instead of having to look to alternative solutions for a down payment. So that is two of the main perks, I would say, to being first-time home buyers that you can benefit from a down payment perspective. And that is where kind of you want to focus on. The next thing from a down payment perspective is to understand the minimum down payment. Minimum down payment now is 5% of the purchase price for 500,000. So if you're buying for 500,000 again, that is 25,000. If you're buying for over 500,000, there's a 10% on the overage that you have to put down as the minimum. So the example I like to utilize is 600,000 purchase price. You would have 25,000 down on the first 500 and then 10,000 down on that additional 100,000. And that would mean that your total down payment for a $600,000 home is not technically 5%. It would be $35,000 on that $600,000 mortgage, or sorry, purchase. So that's something to consider and we can crunch numbers on that. If you are purchasing for over $1 million, which is more and more common these days with the way the market's going, the minimum down payment no longer is that 5% and 10% option. The minimum down payment is 20%. So anything you're purchasing over $1 million must be 20%. There's no ifs, ands, or buts. So if you're looking for $1 million house, then that's a minimum of $200,000 down. Something to think about when you're doing your application as a first-time home buyer, it can be useful to speak to family members. Sometimes there are ways to put them on an application to help qualify, or there might be gifted down payment or future inheritance that can be given prior to that. Families are helping more and more buyers. Sagan today had a presentation, which is one of our default insurer providers in Canada, that 1/4 of their applicants all have help in some, or sorry, 1/4 or 25% of their buyers have help in some form from parents, whether that's, co-application or giving a down payment, that sort of thing. So we are seeing more and more clients getting help from family, whether that's mom, dad, sister, brother, grandma, grandpa. So something to think about when having those conversations. And the last thing I speak about, and I would say the most important part of the entire process, which is why I leave it at the end to give you the most amount of importance, And if you do have me on social media, you'll see that I harp and rant about pre-approvals all of the time. Pre-approvals are so important. Whether you choose me or someone else, any mortgage professional you like to work with, the importance of a pre-approval is we are in a seriously increasing rate environment right now. Truthfully, before I logged in this evening, I received 5 lenders that are increasing their rates at midnight tonight. If you're considering purchasing, a rate can be held for 120 days. If the rate goes up, then you have this rate locked in for 120 days. If the rate goes down, then you still will get that lower rate at the time of purchase, but we can't go back and give you that rate that we talked about if you haven't done an application. So having that application in and having that rate held for 120 days is so important, because it can mean the difference of 5, 10, 15 basis points. And if we're talking about hundreds of thousands of dollars, that overall cost of borrowing can really impact you as a buyer and your cash flow in general. Not to mention that now we qualify differently. So as the rates continue to get higher, the qualifications will be more challenging, because we no longer are stress testing mortgages at 5.25. We're actually stress testing them at the contract rate +2. And what that means for you is the qualifying rate was 5.25, as well, it still is, but that's what we were qualifying clients at, let's say, a month ago. That as rates have continued to increase, when they went past basically 3.25, we started qualifying at the rate that you'll be paying +2%. So clients today are qualifying at 6% instead of 5.25, which means that their buying power is significantly being impacted. That's another reason to potentially speak to your mortgage professional, though, about variable rate mortgages, because they are still qualifying at 5.25. So if you're looking for extra buying power, consider that variable rate option. And the last thing I'll say about the pre-approval, or maybe the last thing, there's usually one more thing I add, is that a pre-approval is your key to understanding your affordability. There's nothing worse than getting into a situation where you are in love with a home and you want to make an offer on it, but you haven't been pre-approved, and your expectation versus reality are two different things. Not to mention that you might think you have a certain income. However, we can only use certain parts of that income. So we really need to make sure we understand your full financial picture, so that we can give you a very strong pre-approval when you go into today's environment, which is very competitive. Even though we're seeing a shift in the market, which is great and very welcomed, it is still extremely competitive. So having a underwritten, which means a pre-qualified pre-approval, is so important. And I'm going to touch on what that means. Pre-qualified means if you're working with someone like myself, I don't just take your application that you provided me and give you a rate. I actually ask you for all documentation up front, and I pull your credit bureau. And I'll tell you why I do that. It's because if I just go by what you say and I assume that what that information is correct, there could be things in that application that I'm not allowed to use. For example, if you receive a bonus but you don't have a 2-year history of that bonus, I can't use it. If you're self-employed and you make a certain amount of money, but you only declare a certain amount to Revenue Canada, I can only use what you declare to Revenue Canada. So there's things that I need to see in writing in order to give you a true understanding of your affordability. That being said, I also pull your credit, and that's because there may be things there that you're unaware of, truly and honestly, that you didn't know that was still reporting to your bureau, or there may be things that are wrong on your bureau, or there may be things that I can help you with and fix before you put an offer in, and that might actually help you with qualifying for a better rate, or putting you in a better position for success when you actually purchase your home. So there's quite a few things that we do in order to ensure that you are fully prepared and you are fully ready to make a solid offer on a home, in order to, prepare you for that offer time successfully. And that is doing a fully underwritten, all documentation upfront with credit pulled report on your financing for a pre-approval. So I know that that's a lot. Maybe we'll take a break and pop into the fun stuff with Kathryn.
All right. So this is the fun part. So previewing homes. So you have your realtor now, you're already pre-approved. Now it's time to house hunt. So your realtor will start sending you homes that fit your criteria and start setting up appointments to view those homes with you. Just make sure that you're taking notes when you're viewing the homes, and you'll start to get a really good feeling of what you like and what you don't like the more you go through. And then that way there, your realtor can narrow it down as you get a really good feel the more homes you go through, so they're not sending you, things that aren't appealing. Also, the more homes you go through, they can kind of all blend together. So it's important that you have your notepad down and you're writing down what you like, what you don't like about each home. And then number 5, it's time to make an offer. So we've been house hunting. You've finally found the home that you love. Fantastic. Now it's time to write your offer. So here's what happens next. Your realtor will draft an offer for you that protects your best interests. So first you'll decide on a price. The offer price must reflect the true price of the home. So your realtor will show you the comparable sold properties in the area to help you decide on an offer price. Now, the true price of the home is more important than ever in this type of market. We are in still a little bit more of a seller's market. And so what tends to happen is some sellers price their homes a little bit lower, and they're looking for that bidding war. And I know the big talk right now, everybody sees on the news, this home sold for 100,000 over, this home sold for 200,000, and that can be a bit scary. But it's also deceiving because the comparable homes in that neighborhood sold for that price. So the list price was just a little lower to try and generate that bidding war, but the sale price was actually market value for that home. So this is where your realtor is going to come in because the comparable sold prices are actually market value for the home. So the list price and the sale price might be a little bit different. The home may be worth more or less. So it's going to be the sold price that your realtor is going to go over with you. And then next is the terms of the offer that your realtor will go over. So deposit and closing date, inclusions, exclusions. Your realtor will go over the whole document with you and answer any questions that you have. The one important thing to note here is the deposit. So your deposit is going to be due within 24 hours of your offer acceptance. So that's not to be confused with your down payment. This is just a deposit that basically just secures the home for you. So that may be anywhere from $1,000 to $35,000, depending on the price of the home, depending on where you're purchasing. And that deposit will sit in the listing office, so the listing salesperson's office trust account. So it isn't given to the seller right now. It's protected in the trust account until closing, at which point it's dispersed throughout the lawyers and it goes towards the house price. So you'll want to just make sure that you have that deposit ready in an account that's easy at your disposal, because it will be due within 24 hours of acceptance. Next is your contingencies, so often referred to as conditions that allow you to opt out of a deal if the home has a problem. So the most common conditions that you're going to run into are going to be a financing condition, an inspection condition, maybe an insurance condition. If you're purchasing a condo, we're going to have a status certificate condition, and that's just where you get all the information about the condo corporation, and that'll be sent over to your lawyer, and your lawyer will review that with you as well. If you're purchasing a country home, you may have a well inspection, you may have a septic inspection. So there's a whole bunch of different conditions that your realtor will use to protect you, just depending on what type of home you buy. So there's tons of different conditions, and we'd be here all day if we went over them all, but rest assured that your realtor is going to make sure that you're protected depending on what type of home you're purchasing. Okay, so next is performing your due diligence. So you had that offer accepted. You may have put in an inspection clause or a financing clause or the well or septic condition. So this is your time now to get those done. So usually you have anywhere from 1 business day to about 7 business days to get everything in order. So the home inspection, if you don't know an inspector, your realtor will have somebody that they can refer you over to, or a couple of different people that you can call and see who you get the best feel from. Your realtor will book your home inspection for you. Your realtor, the home inspector, and yourself will come through the home. This is especially important being a first-time buyer because they'll go through the whole home with you and you can follow them around, and they'll go through it from top to bottom, going over absolutely everything in the home. And then they're going to give you a nice big report that you can go over as well. I'm going to outline important things about the home, but it also may reveal some things that are wrong with the home. If that does happen, you have a few options. You can either walk away from the home, or you can ask for a price reduction, or you can work with the seller to fix these problems. So you, your realtor, and the home inspector will work together. But the reason that we put in these conditions is so that you have that time period to perform your due diligence. So if you do find something that you don't like about the home, you can walk away from it and get your deposit back. All right, I'm going to hand it over to Emily to talk about the lender conditions.
Yeah, so lender conditions usually are the appraisal, if applicable, and that's where the lender will just ask for a third party to come in and ensure that the value of the home is what you paid for it. So right now we are having homes come in at the value, I would say, for the most part, but there was a time not too long ago where some homes were coming in, basically the value was coming in low from the appraisal perspective. So if that does happen, then we have to have a conversation about down payment to ensure that we are covering the right amount. But since that's not the case right now, I don't want to go down that road because it can be a little scary. But we can cross that bridge if that were to happen. Proof of down payment funds. This is a super important one. My biggest tip to buyers in general, whether you're first time, second time, third time, doesn't matter, is if possible to leave all of the funds in one account. And the reason is every time you move the funds, we have to do a 90-day trace history for anti-money laundering rules. So we have to ensure that the money that you are utilizing for that home came from you and is legitimate. So the more times that money moves, even if it's simply from your checking to your savings, means that we need a 90-day history of 2 accounts instead of 1 account. So the simpler you can keep it leading up to that time of purchase just makes it easier for you as a client, and honestly, me as a mortgage professional. So I am saying this to be selfish, because if I can request 1 account history instead of 3 or 4, that is my preference every day of the week. We will also look into other financial obligations you have. So some of the conditions might be to pay down credit cards to 0, maybe even close out a credit card or a loan. You may also be required to show additional income documentation. Sometimes clients will have to show a separation agreement if there is a divorce and we need to show that there's no spousal support owed one way or another, or child support one way or another. There's lots of financial conditions that a lender can ask for. And they'll actually verify the deposit made on the offer as well. So although the deposit is separate and needs to be made upfront, it is technically part of that down payment funds. So when you make the deposit, you make it upfront at, let's say, the time of offer, but you might not actually close on the home until, let's say, June. If that's the case, then that, let's say, $20,000 you put as the deposit is part of your down payment, but we still need a 90-day history or up to a 90-day history to validate that deposit made on offer. So those are the conditions that we will have at the final. You will sign, and once all the conditions are met by the lender and yourself, and you're happy and the lender's happy, then we will instruct the lawyer, and that's where you will sign with the lawyer. And you'll basically be almost at your closing. So we'll pop over to the next slide for, I think, closing costs. Closing costs, perfect. So understanding closing costs is very important. Closing costs are due at the time of closing. And how I like to think about land transfer taxes, which is the most expensive part of the closing, I would say, for first-time home buyers, is that it's just as if you were at the grocery store and you purchased some food, or maybe groceries aren't a great example, actually, because sometimes they don't have taxes. How about you go to your electronics store and you purchase your new iPhone? You don't get to defer that tax. It is due on the time that you purchase the object. So this is just like that. It's not annual taxes that you have to pay in April. These are taxes you pay at the time of closing. So you need to have between 1.5 and 3% prepared to close. And that means that will include your legal fees, your home appraisal, if required, property tax adjustments, which means that let's say you're buying a house halfway through the year, you'll pay for half the property taxes, but the prior owner will maybe have already paid the full property taxes. So we'll do an adjustment and you'll be paying for the property taxes versus the previous owner, because technically they didn't live there for that second half of the year. You will be. Land transfer taxes is the big one. And this is that third first-time home buyer option that I was referencing earlier on. There is what is called a land transfer rebate. This is something that will happen at the time of closing with your lawyer. You will sign an affidavit basically that says that you are a first-time home buyer, that you've never owned a home anywhere in the world before, you've never owned a home or land. And if you do qualify as a true first-time home buyer, then you will get back $4,000, or you will not pay $4,000, sorry, it'll be removed from the cost of the land transfer taxes in Ontario, or $4,725 if you're buying in Toronto. So there are two, one is for Toronto and one is for Ontario. I think everyone here, if I'm not mistaken, is Kingston. So you, if you are buying in Kingston, you would just have the one, which is the $4,000 for Ontario. And it would just be reduced from the costs on your trust ledger when you sign with your lawyers. And that's the legal document that you sign with your lawyers. They will show you exactly where the land transfer rebate comes in. It's not a refund. You do not get money back. It's just taken off so that you're not charged it at the time of closing. The last thing that you might consider having on, or you might have on your closing costs, are if you are putting less than 20% down, you will have default insurance. We have 3 default insurance providers here in Canada. CMHC is the most popular one that you may have heard of. There's also Sagan and CGMI, which is Canada Guarantee. And basically you will have HST on the default insurance that you will pay. That default insurance is manually or automatically, sorry, added onto the mortgage balance, but the HST or GST, the tax portion, you pay out of pocket. So if you are going to be putting less than 20% down, we can absolutely have that conversation, and then we can find out what that will look like. And your lawyer will also be able to tell you, once we know the purchase price, what that will look like as well. So those are the closing costs that we have that are what I would say mandatory, or you can buffer for. If you put aside between 1.5 and 3% of savings of the purchase price, you will have more than enough to cover your closing costs and be in a very good position, which means that you can cover any additional costs like moving. Not everyone wants to box everything up themselves and lift it. So maybe this is the chance to hire those movers. Maybe you want to put some clean paint in the house or update the appliances, even just buying fresh towels, that sort of thing. It's a really exciting time. It's nice to spruce up the place and make it great. As Kathryn mentioned, there might be some upgrades that we know about. Maybe it wasn't bad enough on the inspection to cause concern, but maybe it's not up to your standards as a homeowner. So these are some areas in which you might have additional things to be considering or be cognizant of at the time of closing. And then the last step is prepare to close. So when you call your lawyer, usually I instruct the lawyer, and when I instruct the lawyer, usually my lawyer will be contacting you because she is fantastic and will be proactive in signing the documents with you. Some of the things you will experience is there may be a request for a survey. You will have your title search done, which will ensure that there is nothing that shouldn't be on title there. Title insurance will be had. It's mandatory. And you'll also have home and fire insurance that you'll be required to provide. So home and fire insurance is necessary because if your house burns down, you need to make sure that you are, taken care of from a ownership perspective. Other things to consider and housekeeping items are setting up the heat, water, and hydro, your property taxes with the city if you wish to have it there or outside of your mortgage payment, phone and internet, changing your mailing address, which is super important. And I always encourage people to speak to a licensed life insurance professional. You will be offered mortgage life insurance at the time of application for a mortgage, but it's important to just ensure that you're overall covered. And I always love to introduce you to a broker, because I love mortgages, but I'm not a insurance provider, and I like to stay in my own lane and reference out a professional that is an expert in that area that can really add value to you. And there's nothing wrong with getting a second opinion on life insurance or disability insurance to make sure that you're protected and you're understanding the coverage and happy. So great options during the prepare to close stage to have those conversations, even though they're not really fun, but it's great to be prepared. Um, and then, keeping yourself mortgage worthy. This is exceptionally important. And it's something that we talk about almost every day in my industry. And that is, just because you're pre approved and you have everything at your lawyers and you've signed, a lender has the right to pull the mortgage at any time. And a reason a lender might do that, I can say with confidence, I've never had a lender do that, but the reason a lender might do it is if you quit your job and they call your employer, because they can call up to the day of closing to verify verbally that you're there. If you went and racked up those credit cards that were at zero balances before, to buy appliances, that sort of thing, and it was a requirement to have those as part of the financing condition, to have those credit cards at zero. If you retire, again, that's kind of like changing jobs. Or if you miss credit card payments and now your credit score has gone really low, those are all reasons a lender has the right to, if they wish to, pull financing. So I always say that if you were pre-approved on May 1st and your application looked a certain way, if you signed with your lawyer on June 1st and your application looked the same way, and your closing date is July 31st, your application should look the exact same until the day you get your keys in your hand. That is exactly how it should look. So keeping yourself the same way and mortgage worthy is so, so, so important. And then doing a final walkthrough of your home. So oftentimes you get to do that. That's a great time to do measurements for curtains or furniture. Bringing parents through or family members can be really fun. I'm not sure if that's the same actually now in COVID, but I know that's what I did when I purchased my home. So those are the things that we do to prepare to close. Kathryn, do you have anything else to add for the closing of preparation?
I don't think so. Just to add to the final walkthrough, it's also a time, generally we'll look at 2 final walkthroughs. If it's a long closing, sometimes even 3 final walkthroughs. So like you said, it's a great time to measure. But the last one generally is used to make sure that the home is left in the condition that you expect it to be. So the way that you purchased it, there's no water leaking that has started that you were unaware of, or no punches in the wall. So just making sure that it's in the same condition before we close, because if there were any type of problems, thankfully, knock on wood, I never had that happen. But if there were any kind of issues, that's something that we can take up with the lawyer prior to closing on the home.
And the last one, again, is the fun part. So it's celebrating. So basically you're home and you move in, you get your keys and all is, as we say, well.
Awesome. All right, so it's time for questions. I'm just going to stop the recording here so that you can feel free to